Hey, what's going on, everybody? I'm coming to you live because I'm so tired of seeing all the misinformation that's out there about this stuff and the SBA loans. So, what I want to do is show you guys and teach you guys everything possible about SBA loans, meaning what kinds there are, how to get them, where to get them, what you need to qualify, and how you should be using them. All right. Because there's a lot of misinformation out there that I want to make sure that you guys know, because this is one of the best, cheapest, and longest term programs that business owners can use. All right. So, what I want to do is get to the slides and do me a favor. Anytime you guys have any questions whatsoever, just type them in the chat bot. Type them in, message me, and I'll answer them in real time as best I can, or I'll just answer all the questions at the end. All right, so let's get into it and let's go for SBA loans. Let's dig into all of that. All right. So, guys, all an SBA loan is just a loan that meets certain guidelines, SBA guidelines, that is underwritten by a bank that is an SBA approved bank. And the SBA, after the bank agrees to do the loan, the SBA then reviews it. And if they stamp it, they're basically guaranteeing 80% of the loan. All right. Like I said earlier, these are the cheapest and longest term loans an operator or entrepreneur can obtain. And you have to understand there's different SBA loans for different uses. All right. So what are the types of SBA loans? Just off the top, the easiest ones, you have the 7A working capital loan. And we'll go into what that's used for, but that's just working capital used for growth to acquire businesses. And then you have the 504. The 504 is for commercial real estate. All right. So if you are trying to buy property, if you're trying to build, you can use a 504. Here's what a lot of people don't know. You can actually use a 7A also to buy property. Okay. It just depends on which is your preference. And then we have quicker SBAs that have less stringent guidelines and require less documentation. And that's going to be the Bolt or the Lightning program. All right. So let's talk about the 7As. It's the most common SBA loan. It's going to be, usually it's a 10-year term, and it's going to be, the interest is prime plus 4%. Prime plus 4, prime plus 3.75. It really doesn't matter. What you have to understand about a 7A loan is the interest rate will adjust quarterly based on where prime is. So if interest rates are going up, your rate will go up. If interest rates are coming down, your rate will go down. And also your payment will go down. All right. Now, these can be used for a variety of options. So you could buy a business with them. You can use them for expansion. You can use them to start a business, particularly a franchise. And you can still use it to buy a building or buy property. Okay. They usually take 3 to 12 weeks, depending on how much you're looking for and what bank you use. I will say this. Traditional 7As that are above 500,000 usually take a little bit longer. So they could take anywhere between, let's say, 10 and 30 weeks. Now, the max loan size for a 7A is going to be 5 million. All right. People, there are other ways to get a higher loan number. Basically doing a per se, meaning the bank will issue you a loan coinciding with SBA loan for the additional amount over 5 million, but the SBA is capped at 5. All right. Now, what are the best uses for a 7A loan? 1, purchasing a business. 2, consolidating debt. So if you have a lot of high interest credit cards or bad debt and you can qualify for a 7A loan, that is the best way to consolidate that debt. All right. You could also buy a building with it and buy a larger equipment purchase. The only time I would recommend a 7A to purchase equipment is if the equipment is very, very, very expensive and the equipment has a life above 10 years. Okay. If you think that the equipment usually lasts 5 years or 7 years, you should not use a 7A to buy it, because eventually it's going to hurt you, because you'll be no longer using that equipment and still paying for it. So you always want to use the right program that will finance it over the lifespan of that equipment. Okay, let's look at some of the benefits. Why do people love 7A loans? Well, it's usually the longest term, it's usually the cheapest rate, and you have that variable rate. So when you're in times where you have a high interest, or prime is high, like right now, and you think it's going to go down in the future, getting a 7A loan makes a lot of sense, because as that rate comes down, your rate's going to come down. There's a lot of tax benefits too. So when you are doing this, any of that interest that you're paying back can be written down or written off. And having a 7A that is paid on time will help your business credit. Okay. It does not get reported to your personal unless you're in some type of default. All right. So let's look at what's typically needed to apply for a 7A. You need an application. You need the 1919, which is the official SBA application form. Every bank uses that. Then you have the form 413. All that is your personal financial statement, just your personal report card in life. You're going to need the last 6 months of business bank statements, a driver's license, a voided check, the last 3 years of business tax returns, last 3 years of personal tax returns. You're going to need the last 3 years of financials and year-to-date financials. Anytime you see financials here, always know I'm talking about having a profit and loss with the coinciding balance sheet. Okay. An asset list, a debt schedule. They're going to ask you for a management resume, just a little bit of more information on you. And then anybody that owns 20% of the business or more has to be on the application, unless you're doing a partial buyout of a partner. Okay. Anybody that's 19% or lower, you do not have to be involved. All right. So what are some of the qualifications for 7A? They want to see 680 credit or better. They want to see strong business credit. They want to have at least 2 years in business, unless you're a franchise startup. And they go back and they want to see that you haven't defaulted on any government debt. And here's what usually trips people up. It's usually not SBA loans. Okay. If you defaulted or haven't paid an SBA loan, they're not going to give you another one. That's pretty obvious. However, student loans or student loans that you co-signed for, if they're not being paid and they were issued by the government, that counts as government debt. So let's just say you co-signed for your kid and he defaulted on the student loans. It's going to be challenging to get approved for an SBA loan. They usually want a clean criminal history, meaning no felonies. And if there are felonies, and I have gotten this done, you're going to need a letter of explanation, and they definitely have to be 7 years or 10 years or older. All right. So you can't have any recent things either. And I will tell you this, you may be able to get out of some of them, or you may be able to get an SBA approved with an older felony. But if it's a white collar crime or fraud, there's absolutely no chance that that's going to go through. And then profit. All right. The rule of thumb when it comes to SBA loans is usually for every 50,000 in profit, you can qualify for 350,000 over 10 years through the SBA. They want to see an E-Trans score. Now, a lot of people get confused with an E-Trans score. E-Trans is SBA's internal scoring model. Excuse me. Which means only SBA banks can actually pull an E-Trans score. However, if you know or you have an idea of what it goes into the E-Trans score, you can kind of prepare for it. So the E-Trans score is primarily based on your personal credit and your business credit. So what that means is if you have strong personal credit, strong business credit, your E-Trans score should check out. You need 175 or better on the E-Trans. And then no bankruptcies within the last 7 years. All right, now what does it take to get one of these done? How long? It's usually 3 to 12 weeks. If it's above 500,000, I would say it's probably going to be in the 10 to 20, 10 to 30 week range. The process is pretty simple. You would apply for your term loan, and then you get a term sheet. In the term sheet, it'll tell you all the terms, the amount, every detail you need. Typically, you sign that, and then you place a deposit down so the bank knows you're serious about the loan. And then from the time the term sheet is signed, it's just back and forth checking all the boxes, essentially crossing the T's, dotting the I's, and making sure everything's ready. And from that point to closing, that's all you're doing. Okay, it's just making sure the insurances are right and all the ticky-tack things. Okay, now, if you are trying to purchase a business or start a new location, you're going to need a letter of intent or purchase and sale agreement. You can't even get into underwriting without a letter of intent or purchase and sale agreement. It's very important to have that. And if you are purchasing a business, always make sure you leave plenty of time for due diligence. So I recommend leaving about 120 days in there for due diligence. And here's why. When you're going through this SBA process and you're trying to buy someone else's business, they're not just asking you for documentation, they're asking the seller. And if the seller doesn't have everything, it can hold up the process. And the last thing you want to do is have your due diligence period time out because of the seller. So always get the most amount of time possible. I recommend 120 days and letting them know that we're going to try to close before then. Letter of explanations, or LOEs. Okay. All a letter of explanation is when they're reviewing your files, if there's something that needs explaining, maybe you missed a mortgage payment or you had a criminal charge 10 years ago. These are the things that you would write a letter of send it in, and you submit that with the corresponding proof of what you're explaining. And then let's talk about some of the things that hold these up. Okay. Usually it's not having the right paperwork. It's not having or getting the right insurance, or you haven't gotten LOEs quick enough regarding past transgressions. It usually has to do with anything on your credit or anything in your criminal or personal history. All right, let's talk about the 504, the CRE. CRE stands for commercial real estate. Okay, so this works the exact same way. The SBA is willing to guarantee 80% of the loan as long as you meet their guidelines. So first, the bank underwrites it. When they get comfortable, they ship it out to the SBA. The SBA approves it, stamps it. They say they're going to guarantee 80% of it. All right. And this is specific to purchasing or improving existing real estate. All right. So what's the best ways to use a 504? Purchase a building or improve a building you currently own. All right. And typically it's going to be funded in stages. So let's say, you need $1 million to buy a building. The building itself is $600,000 and you're going to put $400,000 in work. Well, the way it works is you would go, they purchase the building, and then as the work is getting done, they want to inspect the work, check out the work, make sure that it's done right, and then they will cut the check for that portion of the work to the contractor. Okay? You can also build in working capital component to the 504. And what that means is you can have part of that cash hit your bank account if you need to do upgrades around there that don't involve a contractor. Maybe it's furniture, maybe it's equipment, but you can always build in that working capital portion. And I always recommend that you do, because in case there are overages on building, right? Sometimes they go over budget. You can always pull it from the working capital portion of it. All right, so let's talk about some of the benefits. Cheap terms, it's a fixed rate, and this will go out 20 plus years, okay? So 20 to 30 years. However, if you're using a 7A, you can also use a 7A to buy a building, and they will, if you're buying land or a building, they will extend it to 20 plus years as well, okay? And it's usually a 5-year ARM, adjustable rate mortgage. And then a 504 will also help you build business credit. All right, so what do you need to apply for a 504? You need your letter of intent or your purchase and sale agreement. You're going to need most of the same forms that you do for the 7A. So an application, the 1919, a 413, or your personal financial statement, and everything else on this list. All right, you're going to see a lot of similarities across the different SBA loans. So you're going to see that in qualifications, what they need to review. So don't get confused. This is what you would actually need. Okay, what are some of the qualifications? Again, strong personal credit, 680 plus, strong business credit, at least 2 years in business, no default on government debt, clean criminal history. They're going to look for profit, but in this, with a 504, because you're going out longer, you don't need the same amount of profit to qualify for an amount. So let's just say you did a 504 and you had 50,000 in profit. You could qualify for 700 over the 20 years. Okay. E-trans, you're still going to need a 175 or better. No bankruptcies within the last 7 years. And one of the differences when you're using this to buy a building, and it works with the 7A or the 504, they want to compare what you're paying in rent today versus what their loan payment would be. So if you're paying, let's say, $10,000 and the loan payment is now $8,000, they know you can afford that. That's an easy win. If your rent is $10,000 and the loan payment's $10,000, again, they know it's pretty close. Where this goes sideways is if you're paying $10,000 in rent today and your new payment with this loan would be, let's say, $20,000. Well, that is a cause for concern, and they want to make sure that you can afford that payment. That's when these things go sideways. All right, let's talk about the whole process. 504s do take a little bit longer, and traditionally they are larger. One, they're going out longer, and two, they always involve real estate. So anytime you're involving real estate, it could take a little bit longer. So these will take 12 to 30 weeks. As I said earlier, always, if you're using it to buy a building or to buy a business, make sure you have 120 days of due diligence. The process is basically the same. Apply. Once they feel comfortable, they're going to issue a term sheet. Once you sign the term sheet and leave the deposit, they're going to work on closing. Okay. The biggest things that slow up this process is insurance, the letters of explanation about past transgressions, and getting all the right paperwork on time. All right, now let's talk about the Lightning Loan. This is by far the most popular program that we have today. This and lines of credit. Okay, all the Lightning Loan is a fast-track SBA loan. Okay, it has slightly higher guidelines, but they're not flexible. All right, but these do close in 2 to 4 weeks. Okay, so they close very quick. And here's the main difference. Yes, the credit guidelines are 700 instead of 680, but they go off of top line revenue. So if you're a business that writes down to zero or writes everything off so you don't have to pay a lot in taxes, this is the right program for you because you can still qualify for up to $150,000. So the way they determine how much you qualify for, they're going to go off of 30% of your last year's top line revenue as shown on your tax return. Okay, now you can qualify for a maximum of 150, but you can go in and apply for that 150 3 times. The only contingency is you have to wait 6 months in between each loan. Okay, so technically you can use this 3 times and get up to 450 The highest is 500,000 is when they cap it out, but this is the perfect loan for that. Now let's talk about the qualifications because they are slightly different. Here's where they're different. One, instead of the credit being 680, it has to be 700 plus. Two, you have to have strong business credit. They are not flexible on that E-Trend score at all. And then obviously you're going to need 2 years plus in business to qualify because they need to go off of 2 years of business tax returns and personal tax returns. As long as you did over 120,000 in revenue the prior year, you can apply and you can qualify. That is their minimum. So if you did 120, you have the credit, you can qualify. But if you did, let's say you only did 200,000 last year, you're going to get 30% of that top line. So you would get $60,000 over 10 years. Right? Again, same thing. No bankruptcies, clean background check, no defaults on government debt. Now, what are the benefits of this program? One, it's the quickest SBA loan ever. Two, it's less documentation. So you do not have to provide the amount of documentation that you normally do with the SBA. They only go off 2 years of returns, both business and personal. All right. Profit. You don't need to be profitable. Okay. You can either run negative or write it down to zero or have minimum profit and still qualify. All right. This will build your business credit. Now the term is always going to be the same. It's always going to be 10 years and it's going to be prime plus 4. Right now, that's working out to be between 11.5% and 12% over 10 years. On a 7A or 7A Lightning, there's no prepayment penalty. So you can pay it off in full at any time and save a ton of money. All right. What do you need to apply? You need the application, you need the 1919, you need the personal financial statement, you need 6 months of banks, a driver's license, a voided check, 2 years of business tax returns, 2 years of personal tax returns, your year-to-date financials, an asset list, a debt schedule, a management resume. Okay, that is a streamlined SBA loan for you. All right, now, where can you apply for these? You can go to a bank, but not every bank is going to be able to help you with an SBA loan. And I will tell you this, every single bank has a different appetite for SBA loans. Not every bank even has access to the Lightning loan. There's only a few banks that do that loan. And then, like I said, every bank differs. Some banks don't even offer SBA. All right. Now, brokers. Brokers are incentivized to get you the funds. However, most of them will not have access to the SBA, and they definitely won't have access to the SBA Lightning one. And then marketplaces, like we do more SBA than anybody. So if you need help with an SBA, please feel free to reach out. We're happy to help you. All right. Now, when it comes to SBA loans, I want to explain collateral because this is something everyone gets wrong. If you are getting an SBA loan, $350,000 or more, they want to see one-to-one collateral, meaning for every dollar that they're loaning you, they want a pledgeable asset to cover. All right. And the way they figure out what your pledgeable assets are is they take all your assets on the personal financial statement, they value them at 80%. Okay. So let's say you have $5 million of assets. They're going to value, and you have $1 million in debt. They're going to value your assets at 80%. So that 5 million assets turns to 4 million in assets. And then they subtract the debt. So if you had a debt of $1 million, you really have $3 million of pledgeable assets. Okay. And here's what I can tell you. Collateral is going to be needed over 350, and it's always going to be at discretion of the bank. So they're going to pick what assets they want to collateralize. If you stay under 350,000, you do not have to, or you do not need collateral. All right. Here's probably the most important slide. So we worked on and we discussed what you should use an SBA loan for. But just as important, if not more important, is what you shouldn't use an SBA loan for. You should never use it for short-term needs. You should never use it for inventory, supplies, marketing, or adding 1 or 2 people to your team. Here's why. You have to do that stuff on a daily, weekly, or monthly basis. Okay. You don't want to pay for that over 10 years. Okay. You want to pay for it over a shorter time frame so you can use it, pay it back, use it, pay it back. So all the things on there listed, you should really use a line of credit or working capital or some other shorter program. Definitely don't use an SBA loan for that. You want an SBA loan for longer term things like building, buying a business, or consolidating expensive debt. All right. So let's talk about planning for an SBA. You always want to plan in advance. So if you know you need to buy a building or buy a business in 3 years or in 2 years, you know that you need to start building your personal credit, building your business credit, and actually claiming all the profit you can on your business tax returns. All right. And you want to do that at least 3 years prior to you needing to go buy that building or go buy that business. Okay. And bare minimum, if you can't do it for 3 years, do it for 2 years. Okay. You're going to put yourself in the best position to succeed by doing that. And then we discussed this earlier, but for every $50,000 in profit, you should be able to qualify for $350,000 with the SBA over 10 years on a 7A. All right. So if you guys have any questions, I'm going to wait here a little bit. I would appreciate if you guys could drop them in the chat box. Oh, we got one. All right. So Paul asked if somebody has, I'm pretty sure he meant to put PP, the payroll protection program or the EIDL for their business, does that disqualify them from any type of SBA? And here's the truth. It doesn't. The EIDL it has zero impact on getting a new SBA loan. The only time it would impact your ability to get another SBA loan is if you weren't paying that EIDL. Okay. So if that's the case, don't worry about it. But if you need, if you have an EIDL, you can qualify for all these other programs. So that was a great question, Paul. All right. Any other questions, guys? Drop them in here or reach out, schedule time to connect, and I'll answer any questions you have. I appreciate you guys for tuning in.